So in answer to right now, I don't know. The chart looks like it wants to go lower again and have another spike low, and that's been my view for a while. However, the crypto markets have not made a new low versus last year. And I think we've thrown 8% inflation, the market pricing in at 1.8 rate hike, and a war, and you haven't made a new low. It's like, okay, that's telling us something.
The co-founder and CEO of Real Vision, Raoul Pal, has now defined an interesting position on Bitcoin's market behavior. The crypto investor earlier posted on his Twitter account telling the community that the likes of Bitcoin, much like other assets, remains a risk-on product in the short term. Still, unlike a good number of these alternative risk assets, Bitcoin promises an exponential pattern of growth over in the long term. He insists on the same in one of his latest interviews, which we'll get into in today's video, so watch to the very end. Price charts that work. According to Raoul Pal, 3 price prediction charts on Bitcoin, BTC, Ethereum, ETH, and Solana, SOL, are performing like clockwork at the moment. "We know how this plays out," he exclaimed. Bitcoin, BTC. The Real Vision CEO shared a comparison on a recent episode of Crypto Banter podcast on Bitcoin's current market cycle to that of 2012 to 13, predicting BTC to surpass $250,000 for the end of this bull run. I've been using this for over a year, and it's been pure magic. It gives us a pretty clear target, and it's been magic. It gave me the strength through the bear market to keep adding, thinking, we know how this plays out. Ethereum, ETH. Pal also took a peek into Ethereum's price trend from 2016 compared to Bitcoin's from 2011 to 2019. And so, here's Ethereum versus Bitcoin in 2017. It's been pretty damn good. In fact, I've got this as a real-time chart on my Bloomberg, and it almost works to the day right now. It's so close. Solana, Sol. Finally, Pal brought up a chart showing just how smart contract platform Solana, or Sol, is following the very same path as Ethereum in 2016 to 2017. Should Sol stay on the track, it would be priced above $800 in April 2022. The Ethereum price now is pretty exactly in line with the Bitcoin price in 2017. And here's Solana at the price as ETH, growing faster as a network, but the chart is identical again. It's crazy. Crypto users versus the internet. Raoul then spoke about the updated important chart comparing crypto adoption to that of the internet. Shared via his Twitter account, the chart attempts to represent the pace at which the technologies reached a determined number of users over the same time. The chart for the internet begins in 1992, while crypto begins in 2016, when both Bitcoin and Ethereum were already live. Both technologies had 5 million users during those times. The chart indicates it took crypto only 6 years to uphike its levels of adoption to attract 295 million participants. Over the same period, the internet merely saw less than half of that growth, which stood at 119 million by 1998. Pal claimed crypto has experienced a 137% growth in that period, while the internet saw 76%. 2021 was a major turning point for digital asset adoption, probably boosted by the COVID-19 pandemic, the increased demand for digital payments, and unconventional forms of investment.
So I've talked about this before and just updated it for Global Macro Investor, my research service, which is crypto users versus the internet. What we did here, well, Remy did it for me, was we started at 5 million users each. When they both hit 5 million, we then start measuring. And what we found is that crypto has been significantly outperforming the internet in terms of adoption. We're way ahead of internet adoption. So if we just continue at a kind of slightly slower pace, we get to 5 billion users by the end of the decade. So that's basically total adoption of crypto.
And by the way, it makes sense that we'd see that rapid increase in the rate of adoption because it's being monetized by the users. You know, Facebook is a great platform, but it's been monetized by Mark Zuckerberg, the early founders and investors. What makes crypto different is the capacity for people who are using the network to profit from some of the economic upturn. That's, I think, maybe the most significant difference.
Of course. So like the internet, we didn't profit. We couldn't buy tokens or shares of the internet. We had to find the companies that were going to win. The internet won. But here we can own the network, right? This is how powerful it is, there's something called that. So Metcalfe's law is the network effect, but there's the other thing called Reed's law. And Reed's law is when you build network effects upon network effect and you get true exponentiality. So if we're thinking here, we're building the foundation layer was the internet, then mobile data, 3G and all of that starts accelerating it, and broadband and all of those things. And then you add the internet of value on top. Of course, it's more exponential by its very nature. And the fact that you can own part of the network makes it more attractive for everybody to be involved.
Reed's law, and much more. 2021 was definitely an exciting growth year, and the Reed's law effect of networks built upon networks creating even more exponentiality is quite clear. As Pal always says, this is the fastest adoption of technology the world has ever seen. Furthermore, Pal projected 1.2 billion digital asset users by December 2025 if the sector follows the internet's growth slowdown. The metric could rise to 2.5 billion users if we assume the first 6 years' rate of growth of the internet, he added. The prediction gets more optimistic with each year. The former Goldman Sachs executive said, using the 76% growth rate, suggesting a near halving of network growth as network matures, we now get to 5 billion users by 2030, i.e., it becomes the dominant source of owning, transferring, and recording value and contractual terms global. Wow! Blockchain technology has driven an explosive growth of use cases and better applications. According to Pal, these are the two main factors driving users into this space. Predicting the impact of increased adoption. The former Goldman Sachs executive and founder at Global Macro Investor, or GMI, proposed a formula to predict the impact of increased adoption on the price of digital assets. By multiplying the daily transaction volumes by the number of active users, it's possible to get an estimate of future price performance.
The next chart is another interesting one about adoption, and this is the one I'm pretty proud of. So I've been bleating on about Metcalfe's law, network effects, how to value these things, and it's very hard to do because Metcalfe's law is quite a complicated formula and you don't know what data to use. So I thought, I wonder if I can approximate it. And Remy and I went through all of the data for writing Global Macro Investor. And what we built was a network value model. We tried a number of different things and found out you can explain every crypto network by two simple things: the volume traded on a daily basis, monthly basis, and the number of active wallets over that period. Once you map that out, it's one multiplied by the other. The chart exactly that of Bitcoin. So we thought, okay, this is interesting. So basically the network is the amount of activity on the network, not in number of transactions, but in value that gets exchanged every day, and the number of people exchanging value. So if you think of a network, if you've got one participant who's doing $1 billion, it's not very valuable. But if you've got $1 billion being done by 20 people, you've now got a network. So it kind of makes sense. So I wanted to then test it against Ethereum. So if we look at the next chart, it works perfectly for Ethereum as well. So that's Ethereum. So really interesting. And it also works for XRP, which is weird. You wouldn't imagine it would, but XRP works exactly the same. So then I tried it for Polkadot and it works exactly the same. What it shows you is everything in a network is basically the volume of transactions in dollar terms or value terms and the number of people using it. That's it. And that, I think, is a big breakthrough for the space. I don't want to pat myself on the back. Now, doesn't mean I can yet forecast it using this, but I can show what drives the value of a network. And I'm working on other models now to start having forward-looking indicators to understand, okay, what's really going on.
I mean, those correlations are just extraordinary. We look at a lot of charts, and I don't see charts that look like that very frequently. So basically, it's very clearly correlating the price just to the number of users and the dollar volume of the transactions. I mean, it's your like MV equals PQ.
Yeah, it's amazing. Let's see. ETH model is slightly deviating from fair value, and I think that is because there is a difference in ETH versus all the other networks that I've shown you so far, and that is because, so if you look at the ETH price in blue, it's higher than the network, and I think that is to do with burning of tokens. So if I were to model this better, in ones where there is a token burning model, you should see a slight outperformance versus this model, because obviously you're reducing supply all the time.
I'm sure we'll see that in Gen 2 of the model.
Yeah, well, I don't know. It's complicated. My maths isn't that good.
Pal used the Bitcoin chart as an example. As seen in the chart, in blue, there is the price of BTC since 2010 until now, versus its potential value applying this formula. The charts for Ethereum, Polkadot, and XRP seem to fit the proposed model. In the coming years, as the digital asset adoption expands further, Pal predicted those tokens with burning mechanism, ETH, BNB, Luna, for example, could outperform the market. Similarly, ETH could grow larger than BTC and become a bigger asset in terms of market cap. As Pal said, this event could be of no consequence given both networks' different characteristics. He added, but if a network continues to create network effects, then the log regression channel is still an excellent way of forecasting the future. Assuming BTC remains one standard deviation below trend, it gives a price target of $600,000.
Here's a couple of assumptions. So what you can see is in the first 6 years, the internet grew at 76% a year or 78%. Crypto's been growing at 117%. So it's much faster growth. So we're at 300 million users now. At the same point, the internet was only at 119 million. So you can see the scale of how this happened. So if we assume that suddenly everything slows down in crypto adoption and we grow at the same speed the internet did over the next 4 years, so this is now from year 6 to year 10, we get to 500 million users. So 1.2 billion users. If we just assume the ratio lower, then we still get to, ridiculous numbers of 2 billion by 2026. So it's incredible. And when you're growing at 100% a year, it's 4 billion the year after.
Pal may be right. Considering how far cryptocurrencies have come in only little over a decade is astounding. Even less than 10 years ago, their main utility was to pay for illicit services on the internet. Yet today, we are considering that eventually, the entire global population may be using crypto in some form, either for payments or as a store of value. Thus, Pal may be right that the best is yet to come. A 10 times increase in the nominal price of BTC would indeed require almost everyone to use Bitcoin in some form. But considering the ever greater role tech plays in our daily lives, that may be less far-fetched than it seems today. After all, cashless payments were virtually non-existent a few years ago. Yet, they have pretty much eliminated the use of physical money in some corners of the world. Going from cards to crypto would be a much smaller evolution than from cash to cards. In that case, crypto investors should sit back and hodl because the best is yet to come. With that, we come to the end of this video. Consider subscribing to join in next time for more of such interesting content.